Hey guys, what's going on? Jeff here, and in today's video, we are going to be talking about why I now believe that Bitcoin is entering into a bear market. As you guys know, we have made a few calls this year. We talked about how Bitcoin was going to go to $130,000, stopped just a little bit short at 126. On October the 13th, we discussed how Bitcoin was going to go all the way down to $94,000, and then we anticipated that Bitcoin would probably bounce. At this point in time, it doesn't look like that bounce is happening. We went to 94, doesn't look like the bounce is happening, looks like we might be going into a bear market. So today, we're going to be going over some different reasons why I think that is what might be forming. And we're also going to go over some information that I've been given about this market and what people on the inside are doing. This is kind of insider information. I'm not going to name any names, but what I can tell you is that this is basically the broad consensus of the whales, of the exchanges, of the big players, of the ETFs, of pretty much everybody about where they are buying. And ultimately, what we need to do as investors in Bitcoin is we need to be able to take advantage of this kind of information and think like the big players think. So let's talk about whether or not we're going into a bear market, how we define a bear market, and let's also talk about where we should be placing bids so that we can take advantage of a bear market should one form. So let's go ahead and create a new chart. Let's go ahead and start from scratch. And the first thing that we want to talk about are some of the signals that Bitcoin has gone into a bear market. One of the first things we need to look at here is that Bitcoin did drop below the 50 weekly moving average. This was a sign that Bitcoin was going into a bear market, but there was that chance that Bitcoin was going to be able to hold down here at approximately the 0.618. Bitcoin had an opportunity to hold support here at $94,000, which would have been the 0.618 Fibonacci level, which is the exact same level that Bitcoin bounced off of in this previous correction. Unfortunately, Bitcoin has not done that. It has not been able to hold the 0.618. In fact, we are diving right now down towards 85 at the 0.786. And so if Bitcoin cannot, for example, before the end of this candle close, get up here above 94, set a strong retracement in place, and this just ends up being a wick below 94, then at that point in time, once again, that is where we would be getting bear market confirmation. I'm really looking at Sunday to see if this candlestick is going to close here on weekly below $94,000, because that, as you're going to see in this video, is our line in the sand. If we're below 94, we are officially in bear market territory for a reason that we'll be discussing in this video. An early warning sign was a 50, 94 breaking, market just cannot sustain bullish momentum after that. Now, we've told you that Bitcoin was going to drop down to $94,000 ever since back over here. Bitcoin dropped down to 94 right here on Sunday, and we've been telling you that ever since October the 13th here on this channel. So we've been very excited to watch Bitcoin correct down here because we've been looking forward to entries. But now, once again, because of some of this information that I'm getting, I'm starting to understand why $94,000 didn't hold. And based on what I'm seeing behind the scenes, it really makes a lot of sense. Now, to understand why I say that $94,000 is kind of the line in the sand where we have to get above this or else Bitcoin is in a bear market, let's go back and actually look at the start of the bull market. If you guys will remember on this channel, you can go back and watch all of our videos. We talked a lot about a certain level, and that level was $25,236. We talked about $25,236 over and over and over again, and many of you will probably remember it. That's because that was the line in the sand that Bitcoin needed to break to be able to go into a bull market. And in fact, this is how we were able to call the start of the bull market on March the 17th, 2023, when Bitcoin set a higher high above $25,236. We had our local bottom over here. We had our local top over here, overside, underside test below 25,236 that drove us all the way down to $15,000 when FTX imploded. We talked about how if Bitcoin could finally break above 25,236 here, back test and get support, then that's where we would know that we are in a bull market. There was an overside, underside test that gave us confirmation right here of Bitcoin going into a bull market. So we started talking about a bull market at $15,000. We actually had a lot of people buy Bitcoin at $15,000 because they watched this channel. In fact, one of them bought a car, drove it up to my office and said, "Come outside, check this out." And I said, "What are we doing?" And they said, "I want you to come outside and see this car I just bought." And they said, "Yeah, I just bought this car in cash because we bought Bitcoin here at 15,000, right?" Ended up trading it all the way up to 31. That's what someone did because of the calls that we made. And we talked about 25,236 because it was that level that if it flipped support instead of resistance, as we had seen in these instances, if it flipped to support, which it did, you know, we had two levels of resistance, then we had two levels of support. If it did, that's where the bull market takes off. And so Bitcoin bounces off of 25,236, rallies straight to 75,000. This was the first impulse of that bull market, right? And so 25,236, once again, was that level. And it was that overside, underside test that gave us confidence that Bitcoin was going into a bull market. At this point in time, we have identified $94,000 as being the exact same level that is going to give us confidence about Bitcoin going into a bear market. Why is it not 100? The reason that it's not 100 is, well, on the one hand, it could be 100, right? If we don't get, especially if we don't get above 100, then there's a lot of concern there. But $94,000 is the level that Bitcoin was supposed to bounce off of. If Bitcoin was going to do what we talked about originally, which was bounce off of here and continue the cycle upwards, you would have anticipated Bitcoin to bounce at $94,000. Again, we expected that to happen. Didn't happen. Bitcoin's falling through 94, so that gives us some kind of confidence, because if you'll remember, for the last month, we've discussed if Bitcoin can't hold 94, it's going to 75. Which is exactly what we're seeing happen right now. We break through 61, you move back down to the 1.0 on the Fibonacci. This is just how Fibonacci retracements work. If you don't hold the 0.618, you go to the full 1. The full 1 is 75,000. So if we can't hold 94, then that sends us to 75,000. I think we can all agree Bitcoin going to $75,000 constitutes some kind of a bear market. And so down here on the hourly chart, what you saw happen yesterday was Bitcoin rejected off of 94. Didn't even get to it. Like, we didn't even hit 94. We only rallied up here to about 93.8. We hit $94,000 perfectly on the nose, literally on Coinbase. The candle body, the wick low, said $94,000 exactly last Friday. Fell below it. As you can see, we put like $1 below it right here. We were below it for several hours here. Had a major capitulation below it here. Then we didn't even manage to get below it, and then we went down and set a new low. Now, here's what I will say on the short term, and this is a potential ray of hope if you're a bull, and that is that Bitcoin is setting 1 hourly chart bullish RSI divergence. This could cause a rally back up towards 94,000. If you break above 94, I'm officially once again moving in that bullish direction. But if so long as Bitcoin is below $94,000, we're anticipating a drop, and we're going to talk about what that drop looks like here in just a minute. But before we get to that, I want to talk about why $94,000 didn't hold. $94,000 was a technical target that we saw coming a mile away, but we didn't necessarily call it breaking. Why did it break? I'm going to tell you why it broke. As Bitcoin dropped below 100,000, and this is new information that we have that I just didn't have before. As Bitcoin was dropping below 100,000, approaching $100,000, there are a lot of players, a lot of those OG whales you've heard about, that were using $100,000 as their stop loss, basically saying, if we break below $100,000, that's where I am going to liquidate Bitcoin, because they think we're going into a bear market. And that's why back over here you saw, and we talked about this extensively, that's why over here you saw this cascading liquidation event happen right here. 16 red candlesticks in a row. This was automated selling. Somebody, I still don't know who. I'm trying to poke around and figure out from some of my contacts who it was. But somebody here force closed multiple billion dollars worth of Bitcoin. That's the only way that you get this kind of movement. This was not normal. This was not organic. This was somebody methodically, not emotionally, methodically liquidated probably several billion dollars worth of Bitcoin. And so that's why when you saw Bitcoin drop down here below $100,000, we rallied up and got our head above water for just a second, and we went lower because somebody behind the scenes, again, I don't know who, but it happened right here and it also happened right here, basically shorted the entire market, drove us below $100,000. Caused $100,000 to break, flip resistance, and then that drove us down to our next target at 94. But think about it. The same whales that were selling here to drive us below 94, they're not going to buy, to drive us below 100, they're not going to buy at 94. That's not a very big gap. So where are the bids? Well, once again, considering we've been in the industry for so long, we've, I have a lot of contacts, we know a lot of people, we talk to a lot of people. I'm getting a better picture of where those bids are. And what I am finding is there is a lot of bid down here around 75. It's around this level. You've seen a lot of people talking about 75. If you'll remember, we said if $94,000 breaks, we're going to 75. And that's what a lot of the exchanges are looking at. Something you have to understand about exchanges is that they're not just exchanges. They are also traders and investors of the market. And so they are looking for entries and like this $60,000 to $75,000 range. They have a lot of bids down here. And so if you're wondering, man, Jeb, Bitcoin is really just fallen so fast. Like, for example, over here, Bitcoin dropped 28% over the course of 180 days. That's not really that fast. That's not really that deep. Over here, we dropped 32% in 80 days. Now, that's faster. But then this correction, look at what Bitcoin's doing. Jeb, look, dropped 30% in 45 days. What's going on? Is it the end of Bitcoin? No, it's not. Again, what happened is a lot of the exchanges, a lot of the big players in the game, they more or less went short, and they weren't trying to manipulate the market. That's just what their call was. They were expecting the Bitcoin market to drop down to 94 at the least, and probably lower than that. And so they liquidated a lot of positions, and their bid isn't here. There's very little buying pressure except from retail, and retail's ticked off ever since 1010. So you got retail ticked off because of 1010 not buying. You've got the most of the buying is coming in from leveraged longs, and they just keep getting liquidated. Which triggers cascading forced selling, which causes Bitcoin to crash. And then you have the big players like, the exchanges and the ETFs and a lot of these big whales, they've got bid down at 60 to 75. So it makes sense that Bitcoin's just having this cascade of correction because most of the small cap players got wrecked on leverage and they're not buying either because they're broke or they're scared. And on top of that, a lot of the big cap players have their bid down here at $60,000 to $75,000, which is why we have seen Bitcoin just crash so fast. So what happens here? What happens here is that we now have a bear market. Now, I want to define what bear market is. I don't think that Bitcoin is going to go through a 77% drop. I don't see that happening. I think that's extraordinarily unlikely. But what we are seeing, contrary to what we originally believed, was that Bitcoin is going to go into a bear market if it cannot regain 94. I'm going to give it one last chance. I'm going to say, look, Bitcoin, if it can get above 94 by the weekly close, and the weekly close closes above 94, and we just put a wick down here, fine, bear market averted. But if that doesn't happen, if we close this weekly candle down here, I am officially 100% on team bear market because $94,000 is my line in the sand, similarly to how 25,236 was our line in the sand to say a bull market is starting if we get above this level. For us, being below 94,000 is our line in the sand. If we're below 94,000 and just can't get above it, then that's our line in the sand. Bitcoin is dropping. So expect some rebounds, but we need to flip primarily short because the overall market has basically moved very far bearish. Also keep in mind, typically, so far this cycle, when you saw the death cross, you saw a bottom, a pretty obvious bottom within a few days. The death cross is now 4 days past. No bottom in sight. Look here at this death cross. The next day, Bitcoin bottomed. See? This death cross right over here. Bitcoin bottomed 3 days before it. This death cross over here. Bitcoin bottomed the next day. So we've talked about extensively on the channel. Death crosses at the beginning of bear markets are bear market signals. In bull markets, they're bottoming signals. This is shaping up to be a bear market that is going to send us lower. And that 4-year halving cycle, not the 4-year halving cycle, this death cross is now pointing towards a 4-year halving cycle type of bear market. Now, here's what I do think is going to be different. I don't think you're going to see the traditional 4-year halving cycle in the same sense. The last 4-year halving cycle, we saw Bitcoin drop by 77%. I don't think that's going to happen again. That's where we want to start talking targets. The first thing to point out is that most of the market makers, whales, institutions, ETFs, exchanges, etc., they have a lot of bid, and I'm being told this directly by them, like they're telling us this, is between 60 and 75,000. Like that's what we're being told. That's where a lot of it is. That's where and so, you're going to make a lot of money basically shorting down towards 60 to 75,000 because that's where the bid is. And so we're probably going to see the market drop down towards these levels. When I hear something, I tell you guys, like seriously, I mean, that's what I'm hearing. And so it makes a lot of sense too, because if you look at the overall bull market structure, you see that the 0.618 here is at $57,000. Well, what's $57,000? If you'll notice, $57,000 is 16% retraced off of the previous bull market high. It's a little bit below the previous bull market high, right? If you look at the last bear market, Bitcoin dropped about 20% below its previous bull market high. You saw 20,000 was the bull market high. Bitcoin dropped approximately 23% below that bull market high. So if Bitcoin dropped worst case scenario to $57,000, which is the 0.618, and let's just call it $55,000 because, you might have a little bit of an overshoot. Let's say $55,000, just slightly below the 0.618 Fibonacci retracement off of the entire bull market. Then that gives you a retracement off of the previous all-time high of 20%, which is comparable to what we saw before. If you look at the weekly chart, you look at an indicator which would be the 200 weekly moving average, you're going to see in the previous bull market, we dropped below that level. See, we dropped below that level for quite a while, and this was very similar to the 25,236 level that we talked about. Right now, that is at $56,000 and rising rapidly. Now, that rise is going to slow down as Bitcoin's dropped, but it's still $30,000 below Bitcoin, so it's still going to come up here and keep meeting the Bitcoin market. So at some point, what you're likely going to see happen is you're going to see this confluence where the 50 is going to turn bearish very soon. This 200 is going to keep moving to the upside here. And these guys are going to meet at some point next year, probably sometime around Q3 next year. And when they do, you're probably going to see that bottom in, and that's when the market's going to start going higher. So you're going to see something like this happen most likely at this point. This is if Bitcoin cannot reclaim above 94,000, then this is what's going to happen. You're going to see a bottom probably somewhere above 40, below 80. Zooming in is probably going to be somewhere between $57,000 to $75,000. Zooming in a little more is probably going to be between 60 and 70, maybe 55. That's what we're anticipating. That's what I hear most of the market makers telling me. We talk to them. I mean, we know them, right? We know basically all of the exchanges. I mean, where do you think we get all of our sponsors from? We know them. We talk to them. This is what everybody behind the scenes is expecting, and this is also what we are expecting from all of our macro and fundamental analysis. And this also lines up really well with the timing, right? We have quantitative tightening ending, and I could talk about this all day. We're going to have to break this up into multiple videos. We have quantitative tightening ending pretty soon, but if you'll remember, bring up the USC BBS, United States Central Bank balance sheet. If you bring up the USC BBS, quantitative tightening ended here. Bull market happened over here, right? It didn't happen immediately. It happened like a year later. You see that? So quantitative tightening ending was not the beginning of the bull market. Even QE coming online, even just a little bit of QE coming online was not the beginning of the bull market. It took some time before that liquidity could move its way through the pipes and get out towards Bitcoin. So with QT ending, this is a signal that is a very delayed, very, 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 very early signal that you're probably looking at like a year from now. Bitcoin's going to start doing very well because of that liquidity. So once again, our prediction of Bitcoin bouncing at 94 was starting to come under a lot of strain. I didn't want to call it invalidated until I had some more confidence, but at some point we do have to say that it's been invalidated. And at this point in time, our prediction of a bounce off of $94,000 has been invalidated, and we have to activate the next part of our plan, which was if $94,000 is invalidated and does not hold, then we start looking for Bitcoin to drop down to 75,000. So my target is officially updating. So long as Bitcoin is below 94, my target is now 75. This is very similar to how before we said that if Bitcoin is below 116, our target is 94. My target now, to be very clear, on November the 19th at 4:04 p.m. is that if Bitcoin is below $94,000, our target is $75,000. That's what I anticipate is going to happen. If Bitcoin is below the 0.618 Fibonacci, we are going to drop back down to the 1 Fibonacci at $75,000. And from that point in time, if we drop below 75, then we'll update price predictions from there as well. But so long as Bitcoin is below $94,000, I want to make this very clear. Our prediction is that Bitcoin goes down to 75. If we break above 94, then we could look for a short-term bounce up to 100. But honestly, at this point, I'm really leaning away from the idea of Bitcoin being able to sustain some kind of new major uptrend. I would be quite surprised if that happened at this point in time, because now knowing what I didn't know a few weeks ago, which is that most of the marketplace, and that's what I didn't know, and this is why I'm bringing you this information, because I didn't know this until recently, most of the major players are anticipating Bitcoin to drop down to 70 to 75, and that's where all their bid is. So that, again, that's something that I didn't know. I'm now being given this information, and it makes it a lot more obvious why Bitcoin's acting the way it does. It explains that missing dynamic of, okay, why didn't we hold 94,000? Because it kind of made a lot of sense that we were going to. It's starting to make more sense as I get this kind of, I don't want to call it inside information, but basically inside information. I mean, it's the industry, right? It's everybody in the industry behind the scenes. It's not, these aren't YouTubers I'm talking about. These are people that are managing hundreds of millions of dollars, billions of dollars of funds, but they don't have they don't have an X account, right? But we talk to them in B2B relationships. And so their bid is down towards 70. And so that's why our prediction was always that if Bitcoin breaks 94, we're going to 75. And now we have all the more reason to be like, oh, okay, we understand why that's actually happening now. So if you guys haven't already, I highly encourage you to learn how to trade, because you can make money just as easily in a bear market as you can in a bull market if you're trading. And a great place to do that is on Phemex. If you guys have not already, make sure to sign up for Phemex with the link in the description box down below. This is a phenomenal exchange, and the reason that we have brought Phemex on as a sponsor is because they've taken good care of their customers. A couple of things I want to tell you about Phemex real quick. 3 things, actually. First and foremost, their exchange is awesome. It's just a very, very, very clean, solid exchange for you to do your trading on, and that's really valuable when you are doing your trading. You want a solid exchange with an easy interface, easy orders. It's not laggy. It's not getting super laggy whenever the market is moving fast or anything like that. So you're able to actually jump in and out of trades or hit a stop loss or flash close something really quickly. That's very valuable. But also, more importantly, honestly, than that, there's 2 reasons I want you to sign up for Phemex. 3 reasons. Number 1, we're working on a trading course. And when that trading course comes out, I'm going to give it to you for free just for signing up for Phemex. So working on that, that's on the horizon. Second, on 10/10, when everybody else was dealing with a bunch of slippage, Phemex did not deal with a bunch of slippage. A bunch of people saw Bitcoin, their stop losses didn't get triggered. So they're in a long, stop losses didn't get triggered. They went full liquidation, even though they used proper risk management because the exchange screwed them over. That didn't happen on Phemex. Phemex had phenomenal performance, both on the actual infrastructure side, from the platform not going down, to not having too much slippage, to not having these stop losses not get triggered. All of it went off without a hitch. Phemex did a phenomenal job on that. And on top of that, as we go into a bear market, we need to talk about things. We need to have these hard conversations about liquidity, about solvency. Phemex has been very forward. They've been very, very, very upfront with the proof of reserves. They've been very open to audit. They've been very open with all of these things. So Phemex is a phenomenally safe exchange for you to use during a bear market as well. Because honestly, you might see somebody go belly up in the bear market. Femex ain't going to be them because they have prioritized safety. So if you have not already, sign up for Femex. It's a phenomenal cryptocurrency exchange for you to check out. So definitely recommend checking out Femex with the link in the description box down below. Really, really, really great exchange. Could not recommend them enough. Very excited to have them on as a sponsor. Here's the deal, guys. I want to make sure this is very clear. Today is November the 19th, 2025. If Bitcoin does not regain $94,000, I'm expecting Bitcoin to drop down to $75,000. And I expect that a Bitcoin bear market would not go below $50,000. I don't think that we're ever going below 40,000 again. I'm leaning pretty heavily in the direction of saying we're not ever going below 50 again. But generally speaking, a bear market is probably going to be more like a 50 to 60% bear market instead of the 77% bear market you've seen in the past. And that speaks to the maturation of the space. That speaks to how Wall Street is basically turning Bitcoin into the S&P 500. It just has this continual average growth rate and just kind of goes in the super cycle over time. And so that's where I think that you're going to see a slightly shorter, slightly shallower bear market than you've seen in the past. Once again, unless some massive exchange goes belly up, but all of them are in really great shape. The industry has moved a long way in the last 3 years since FTX blew up. So very excited to see what's going to happen in a bear market. Really looking forward to getting some entries. I want to get to a certain amount of Bitcoin. That gets a lot easier in a bear market. So I'm excited. Like, we don't need to freak out. I have worked very hard to position our family to be safe going into a bear market over the last month because I did have that 10% chance that we could drop down to 75. So I prepared for that 10% chance. That 10% chance is now the most likely chance. As we got lower, and especially as we rejected off of 94 yesterday, that became the most likely scenario. And so we need to, once again, as I've said, be preparing for bear market, be prepared for bear market. That means we need cash in an emergency fund. That means we need dry powder to buy the bottoms. That means we need a stable income. That means we need a 50% revenue reduction plan. That means we need to carefully manage liquidation prices. That means we need to carefully manage debt. That means we need to be ready to short the market and have a direction more so towards shorting the market instead of longing the market, be looking for more short entries and the like. And so this is the third bear market that we have gone through. I'm not phased at all. I love buying Bitcoin on the dip. Really excited to see Bitcoin go back down to $50,000, $60,000, $70,000. Could not be happier about that. So if you're interested in coming along on that journey with us, make sure to hit that like button, subscribe to the channel. If you got one piece of value out of this video, hit that subscribe button. We're about to hit 250,000 subs on YouTube. Cannot wait to do that. Very excited to share this journey with all of you guys. I really appreciate you being here. Make sure to check out Femex. Make sure to check us out on X over at CryptoJeb. We're about to hit 75,000 followers on X. Really excited to do that. And before I go, guys, I love you. And before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.